Very interesting, huh? Good old Bitcoin makes a nice move to the upside. And there's been a trigger of good Bitcoin ads coming to surface. Tonight's live, ladies and gentlemen, we're going to be talking about this new ad by Bitwise. And it's kind of got the party started for Bitcoin moving higher. We got the stock markets making all-time highs again, with S&P pulling back ever so slightly. The Dow itself is making moves, man. Santa has actually come a bit early for everyone. Now, granted, Bitcoin hasn't really made that much of a big move up and taken any critical points, but this is a good promise. In tonight's live stream, we're going to pretty much do the same as what we did earlier on. We're going to break down Bitcoin's price action. We're going to dive into this Bitcoin ad by Bitwise and understand what is the impact of this. Because the last time we had ads on cryptocurrency, it all came about with that big game that they all play. And now I can't even say it due to copyrights and all of that stuff. So I nearly said it. Don't want to be saying that word on this channel, but it's that thing that they use when they throw it and they catch it and then they run to another post and they require so much padding because they can't play the game properly like the guys do in the UK, where they don't need any padding, they just run into each other. You know what that game is. Anyway, moving forward from that, ladies and gentlemen, it has seemed like it's become a little bit exciting in cryptocurrency. Bitcoin holds out very well around the 40,500 range and has made a nice little snap reversal back up. Now, we're going to be diving into why the stablecoin market is kind of giving us signs of new money coming into crypto. And we've said this before. New money needs to hit crypto, which new money is going to encourage old money, if there is any of it left, after the big old drop from 69 and the FTX and the Terra Luna crash and what have you. So yeah, we kind of, things are looking optimistic. Now, that doesn't mean I'm bullish. That doesn't mean that I'm bearish, because I get snapped at if I say, oh God, Bitcoin's going up and that's negative or that's bullish for Bitcoin. You can't say that, Tino. Good evening, guys. Welcome to Traders Reality. My name is Tino. Let's have a conversation. Let's get with the flavor. This mic is too close to my face, man. Here we go. So, what have we got? Bitcoin. Block trades have worked out pretty well today. We've had some very interesting flavor in regards to certain zones being played, and our weekly projection of Bitcoin seems like it's coming into fruition. So we'll be looking at that later on in the week to see how it ends up. But ladies and gentlemen, look at this. The most interesting man in the world. Do you like the title? The most interesting crypto ad in the world by the most interesting man in the world. He's pointing at us. The ad is pretty interesting, guys, when we go into it itself. Look, we've got here, I don't think you can hear it, but I don't want to play it just in case there's a bit of a problem with copyright. But he sat there having a good little drink and he says, you know what's interesting these days? Bitcoin. He just says it out and that's it. ETFs backed by crypto specialists. No. So, sorry. This is what's going to become very interesting. Remember when we said that banks don't get exclusive rights, or should I say access to buying Bitcoin and effectively offer it to their clients? They can't do that because of legislation. The only way that it can be done is if a fund is created, and that fund is effectively a pool of money that is used to buy the cryptocurrency, which is then represented as a store of value in the ETF. Is Bitwise pretty much saying that this is where you can get it from? Is Bitwise the intermediary for the banks who can't buy cryptocurrency but have the cash to back it? Bitwise is stepping up and using a very, very wise man as the most interesting man in the world. And he looks pretty serious. I'm actually quite scared of looking at this guy. Like, if this guy's staring at you, then he says, you know, have you got Bitcoin, or have you purchased the Bitcoin ETF? Could you say no to this brother's face? All right, he looks like he's a bit old and what have you, but you wouldn't dare slap him up for staring at you like this, but you'd also be kind of intimidated at what he could do. And those eyes look kind of messed up as well. So yeah, we just I'm not endorsing the ad, but Well, listen to what this guy says. With that being said, ladies and gentlemen, let me just get into the flavor of what I mean about this stablecoin. So listen to this. Word on the street is saying that fresh money flows into crypto as stablecoin market expands after 18-month downtrend. So this is interesting because Tether has added 7 billion to its market cap. Tether itself is one of those obscured. That's a funny story, Tether is. But it's saying that there's a new signs of capital coming into the marketplace. The article goes on to say that stable market cap expanded for the first time since May 2022, with Tether USDT being the main beneficiary, rising to an all-time high supply of nearly 90 billion. The trend reversal is a sign of improving liquidity in the crypto market as more capital enters the ecosystem. That's what we need. We need new money coming into crypto. Now, of course, when Bitcoin starts taking out old price points, so if we go into the 1 hour time frame, just expand on this bad boy, reverse that zone right there, you can see that, quite frankly, ladies and gentlemen, Bitcoin hasn't really gone anywhere. Tony D, what is good? So it looks like we got the candle mafia up in this place. Mad love to you all, ladies and gentlemen. Anyone passing through from Frankie Candles, what is good? I hope you're all good, guys. All right, then. So let's get in with this flavor. Thank you, Tony. Mad love for that, my bro. All right, this guy's going for it. Tony's bringing the fire. Mad love to you, my bro. Thank you so much, man. That's awesome. You guys are getting memberships. Happy days. Happy days. All right, then. Cool. Congratulations, Kelly. Well, we got congratulations. Congratulations are in order or not? Do we have any birthdays in the live stream? You know, happy birthday to anyone at the back end of December being born. So, you know, that's happy days to you all. Happy birthday. And to anyone tomorrow, I'll be wishing everyone happy birthday tomorrow as well. I don't know. It's just people's birthdays every single day. I don't think there is not a day that someone is not born. You know, that'll be interesting to find out. Anyways, so what we've got going off here is Bitcoin coming up to only the last areas that it was in from last week with all the hype and the sell-off. So it's really important that we pay attention to this range in Bitcoin by a block principle. We've got this area right here that Bitcoin should, in logic, start to break from if it can sustain this range. Now, Bitcoin has made itself moved away from the psychological ranges at the start of the week. And usually what the case is when they move aggressively away from the psychological ranges, you'll find that if the true move is going to play out, then they will continue with the move down. But if they do an instant reversal so early on in the week, this could be a sign that Bitcoin might be done with this area. Now, if we zoom out, we can see that we've got ourselves a bit of a big structure coming into play, which one would assume could be a big W formation coming here. Now, let's just zoom out for a second and understand where we are. 90% of the stock market would look at this and think that there could be a potential cup with handle forming. So you've got the cup happening right here. We're waiting now for the move up to effectively come back in, retrace, and shift out to the upside. This is logically how investors would use the cup with handle method, which I believe it has been pioneered by William J. O'Neill of Investors Business Daily, but it would be... For Bitcoin, it's a bit different. Why? Because Bitcoin is very volatile and certain stocks don't carry the same volatility as Bitcoin. But if you're talking about really lightly traded stocks, then yes. Any stock that trades below 100,000 in volume is a no-go. And that's the average daily volume. 100,000 shares, well, you're going to get slapped about if this asset gets purchased by someone and it just simply shoots up and then comes back down with a sell. So you got to be careful. You're really looking for stocks that trade more than 1 million shares per day on average, just so that you're not caught out with wild volatile price movements. And of course, you want to be paying attention to stocks that are priced $25 and above, because there's a reason why certain stocks are priced below $10. There's a reason for it. There's no financial backing by any fund managers. So you've got to take that into consideration. Does management hold any of the stock? Well, if management ain't holding much of the stock, it means they're trying to give as much of it away as possible to encourage people to buy it. So if they're advertising that the stock's there for them to be purchased, but they're not buying it, then that tells you there's a reason why people ain't interested in the stock. So take that into consideration, and that is the works of William J. O'Neill of Investors Business Daily. So go check that out if you are down with the stock market flavor. Now, with that being said, ladies and gentlemen, Looking at Bitcoin's price action right now, we need to go over to the daily time frame. So let's get rid of this, go to the daily time frame and understand what we've got throughout this live. What I'm going to do is quickly go have a look at what's going on in the altcoin market. We're going to dive into a few order flows concepts and discuss what's going on with Bitcoin. A very interesting zone right here coming to play with Bitcoin. So I'm going to be talking about that very, very shortly. We're going to talk about some liquidation points that are coming into action with Bitcoin. We just run this bad boy again and see where we are. Yep, we're going to be talking about this very shortly. We're also going to be diving into why Apple has halted the US sales of its smartwatches after patent loss, and that's led to Apple taking a little bit of a smack across the board. So we're going to be looking into that bad boy as well. And then we're also going to be diving into some altcoins that are showing some promise. And we've got some big price movers coming into play very shortly. And we bring the analogy of a nightclub when we start walking in and trying to find ourselves a bird and what have you. But yeah, we'll be talking about that later on. So make sure you stick around, ladies and gentlemen, for that flavor. So let's get the party started off with Bitcoin on the daily time frame for all my holders. Well, we are here yet again on the 5 and 13 EMA. That's where we are, ladies and gentlemen. What did we say about this? Once you see price breaking the 5 and 13 EMA, you need to wait for the confirmation candle to decide if the narrative is going to suggest Bitcoin's going to go up or down. Here's the candlestick right here, guys. All right? We spoke about this today. Look what's going on. Bitcoin has initiated a snap reversal, found support in this area, and now has effectively made the move above the 5 EMA and the 13 EMA. So from a holder's perspective, they're going to be looking at this thinking, Bitcoin's going to go up. Is now the time to buy it? Well, look, it's not financial advice as such. It's common fucking sense, ladies and gentlemen. And what do I mean by common sense? If you don't put yourself into a position where you are having to manage a position, how are you going to gain the experience of understanding how your asset moves? We have to put ourselves in those situations. That doesn't mean you kick your nan out of her house, sell the house, rent the dog out just so you can create a little bit of income for your nan because you feel bad about kicking her out of the house. Use that money and just chuck it into Bitcoin. That's not how it works. Remember Jesse Livermore? He came with the idea of the 20-20-20-40, okay? So that means you're putting 20% of your portfolio or your capital that you're deciding to use into the asset that you're looking to invest in. Happy days. Does it make any movements? Cool. Put another 20% in. Awesome. Once you've got yourself 40% of your capital into that, you can then say to yourself, all right, I've got 40% of my capital in. How much of a gain have I sustained with this? Well, am I up 10%? Happy days. Well, what you could do is you could take 2.5% off that, or you can take 5% off that, start banking profits, leave the 20% or leave the 40% remaining amount inside of there. Happy days. Then you see more movement, 20%. Okay, so now we've got 60% of our portfolio in there. Our 10% has now become 15% or whatever it is you withdrawed or you decided to keep it in there. Fine. Now we're seeing cryptocurrency or Bitcoin is making the move to the upside. ETFs come into play, ladies and gentlemen. We are now going to 100K. You then say to yourself, all right, I've got another 40% left where I can actually smack it into the charts and I'll see exactly what happens. But this is where the mistake is. People see that they've got a lot more cash in the sidelines to load up on Bitcoin because they need that gratification, or should I say the solidification of price continuing in their favor because they think if they've been right with the 60%, then they're going to keep on being right because they've got 40% left to load up. No, that doesn't work like that. This 40% acts as a buffer for you. That means if you do see a little bit of a drawdown, you can then load up, maybe get rid of the position and take the exposure and load up again elsewhere. You can put that in another asset that's moving if Bitcoin isn't moving, but you've got the flexibility of capital behind you. Always maintain a position of cash when you are investing. Why? Because you need to have a backup plan just in case. You might need to hedge yourself against Bitcoin, or you might need to hedge yourself against euro, hedge yourself against the dollar. It all depends. But do not put all your capital into an asset and you have nothing else behind you. Yeah, I get the idea of dollar cost averaging and what have you, but you need to be able to say to yourself, if I put 20-20-20, that means I could effectively wait for a bigger dip on Bitcoin, still keep my 60% in, and then get my average at a 40% at a really low price after an extreme move to the downside. Bitcoin then snaps up, and the profit that you're earning on the 40% is effectively alleviating the profit or the loss on the 60% that's in your balance already. So it gives you the option to really cover yourself if you have to. Do not commit all of it. And that's Jesse Livermore for you right there, ladies and gentlemen. Now, what else have we got? What a short to 40k, 1,500. Now the beautiful long, then the downturn continues. Tino, Mr. Dutch, what's going on? Okay, then. Now, listen, look, with regards to the daily time frame, that's just for my holders itself. The weekly chart itself is looking very good because we're still trading above the 5 EMA on the weekly time frame. Trend is continuing to the upside, and we don't really have any problems. Now, when we do surpass the actual 44,785 zone, we're going into new money. When I say new money, it's a price in the chart that old money had previously been shaken out from, and the logic says that if people see price of Bitcoin going higher from this point, new money is going to come in, and we can back that up with the stablecoin idea as well. Okay, if we just quickly pull that up, there we are right there. Now, listen, we've got Christmas coming up, and we've got some big news coming out this evening for the Japanese yen. Now, this is very important because the Japanese yen and the dollar today have been pretty interesting. Euro hasn't really been doing much. We go to Euro, it's actually trading in the same zone, and you know what, I don't expect anything different from Euro, especially at this back end of the new year, coming into the end of the year, and they usually do this every single year when it comes to Forex anyway, so you've got to take that into consideration. Looking at the dollar dominance itself as well, dollar hasn't really gone up, it hasn't gone down, but Bitcoin's made the move up. It's of course been motivated by news. The ideal is that we really want to see the Japanese yen, in principle, will be looking at starting to roll over if the Japanese tonight do decide to pull some numbers out and kind of scare investors. The yen needs to come down. They've already closed the gap so far, so good. So we're going to be expecting the yen to roll over. So take that into consideration, okay? Oil today's made a nice little move to the upside. So that projection worked out nicely. It's meant to be a weekly projection and ended up completing within 24 hours. Let's go into gold. Gold is still doing its flavor right there, ladies and gentlemen. Going into Solana, it's still holding out. It's come up towards that 75.42 zone and rejected that region right there. We're going to go into Ethereum. Here we go. Ethereum making a nice little sharp V-shaped play right there. Going back up into that zone. If you want your altcoins, ladies and gentlemen, let's get the likes up to 1,000. It's free to do. Go check it out. It's just literally right there on your phones. How many of you are actually on mobiles or on desktops? Can you please let me know? Type 1 if you're on a desktop. Type 2 if you're on a mobile. Type 3 if you also have the desktop and the mobile version up because you're utilizing the benefit of being able to like twice. Obviously on different accounts, but yeah. So what we got here, Wi-Fi when it's at all-time high, when all-time high. Okay, PC here. Okay, 111, desktop. Okay, PC 2111. Okay, so a lot of you on your desktops. Not many people on the phones. Interesting. That is crazy. You're all on your PCs. Fair enough. All right, then, cool. So let's get with it. If you're on the PCs, that tells me you can interact with me on this live. Cool. So here we go. Right. Let's go back into BTC for a second. So 2.95% up for the day. That's all good. Standard recovery of the vector candles in the range. They took out that 41,700 zone. They continued from that point. Happy days going into the psychological ranges. Now, let's have a look at some orders. So, that reminds me of that guy. What's he saying? When he says his son, do I look like Elon Musk? You know, my son has 15 years work experience. He is 9. He makes me laugh. He really does. That just chuckles me. Anyway, so what we've seen with order flow is there have been a lot of people stepping in to sell Bitcoin. Look at this. The initial amount was 1.3 million. 5 million was sold or traded at that point for sell side on the offer at 41,800. The next zone itself come in at 1.96, which triggered 172% increase or more, which shows 3.39 million traded at the 41.9. At the top side of that range right there, we have 1 million that was initially going to be sold at 42, and 8.42 million was initially sold on the ask at the 42,000 zone. We go even higher, and we've just had another 795% increase on how many people have sold at that point. So that effectively tells me that there are people, as price goes up, people are actively selling, okay? So right now, we're currently working a value of 42,600, where the offer is coming in saying that we've got $2.57 million worth, or million, in terms of traded value that is being transacted at. And we're only now just shy of 646,000 into that order. So we could expect a little bit more selling coming into play to effectively see Bitcoin moving back up. When we go into the chart, the big pool is all the way up here at 17 million. Now, 43,980 is coming into play. Now, notice how there's a lot of selling below the whole number of 44,000. We go up a little bit more, 41,000, or just slightly above, right? So we got that there. There's not an order. Oh, so it's just above at 44,100. You got 1 million right there. That doesn't mean that it's most definitely going to transact 1 million, because we've seen previously that it can encourage other traders to step in with, at this point, 8 million was traded and 1 million was initially placed on the order flow, which was there for 7 hours. Okay, so take that into consideration. Private YouTuber says, in your opinion, could we still continue the highs on ETH if we would retest the 800 EMA on the 1 hour time frame from current price, or do you think it will be over? Okay, then, right. So let's just quickly go over to Ethereum. Let's have a look at Ethereum's liquidity first and then put things into perspective from that. So let's go look at this. So the gentleman's asked, Tina, in your opinion, could we still continue to the highs on Ethereum if we could retest the 800 EMA on the 1 hour time frame from the current price, or do you think it will be over? All right, then. So quickly go over to Ethereum right here. And we've got this area, and 1 hour time frame is really the sweet spot for price action, day trading, the hybrid system. All right, the 1 hour time frame. That's what's important about it. Now, what you've got from a technical view, okay, just looking at candlesticks, inside these areas here, which is the red vector, violet, red vector, this is where order flow principles come into play. And what do we mean by that? Well, we're talking about imbalances, quick purchases on Delta, zero finished markets, unfinished marketplaces. Auction theory comes into play with these vectors because they are a representation of price action being executed at speed, okay? And this is why we're using EXO charts all the time to understand the flavor of Bitcoin. We just go into Bitcoin right here, and you can see what's going on Bitcoin. We've got huge imbalances right here, imbalances on the ask, and you can see no one was offering, no one was bidding at this point right here. So the market logically is going to try and come back into this zone to effectively start finding people it can bid into, unless they do decide to start marking price higher again. We'll be looking at that very shortly. So to respond to that gentleman's question, could we then see the 800 EMA and then bounce back up again? Well, the thing is, this move to the upside has been motivated by what's going on with the ETF. So we're now going to go into Asia, and they're also going to get the exposure of this news regarding the ETF. They see the ads, they think that's it, it's going to the upside. So that's what we're gunning with right now. The best way for you to understand your logic on price going into the 800 EMA is to just take the midpoint of the vector candle, all right? Take that range. You've now got the midpoint of the vector zone. You then need to just take the block principle and put it like so. This is where you are reactive to the chart. It's inside of this area, because Bitcoin and Ethereum, more so Ethereum, has actually returned back into a point where it's selling from. So from an order flow principle, we're going to assume that this could be an area that they could reverse price. If they mean the business, then we're going to see support coming into play at minimum on the daily open, or at this vector candle region right here, which sits at the 2,200 zone. So we've got to take that into consideration. Again, we don't know exactly where price is most definitely going to go with guarantees. All we can do is assume that if we follow a certain strategy or have a specific structure in our minds that we've seen in the past play over and over again, our goal is to try and hunt for its development and assume that if we do see a criteria coming into play, the chances of that actually working are going to be based on the success of the trade. So you decide to take a trade on that logic that it's going to come back into this midpoint and bounce away from it. Do you decide to run your longs now, or do you wait until it pulls back? That's going to be based on your relationship with risk. Again, it's all probabilities. And when you understand probabilities, you then eliminate yourself getting all emotional about whether price is going to go in your favor or not. There are a lot of people, and I've been victim to it as well. I did it myself. Sometimes I do it, okay? But there'll be instances where you take a trade and think you're going to analyze its performance whilst you're in the trade. Well, I used to do that, and I'd put down size and I end up getting smacked about. Now what I do is I probe my trades. I then say, okay, do I believe Ethereum's going to go up from this point? Okay, cool. I'll make an entry in this area right here and assume if I'm correct, then cool. I'll make myself $150 if it moves up towards the psychological high. If I'm really correct and it does well, then I'll wait for it to move up as much as it can, and then I'll start slowly loading up into the position if I'm going to play a longer term move. okay? Probing your trades, giving it a chance to move and allowing you to maintain the idea of focus on the play rather than your balance because it's going against you. Well, we know full well that your balance is going to hurt you more than what the play is doing because you're going to be focusing on the red that's hitting your account because you use too much size because you feel like you're missing out on an opportunity to the upside or to the downside, okay? Again, price, I can guarantee, will move up, it will move down, and during quiet times, it will go sideways, all right? The whole point of trading is to get you familiar with a certain structure, a certain setup that you are comfortable with, and put down a certain amount of risk that will allow it to work. There's no point in putting down size in this area, and then you see Ethereum come all the way back down and recover the green vector candle, and you say, oh, fuck it, man, that didn't work. I've lost out 10% of my account. What a stupid approach. And then you witness 20 minutes afterwards, it shoots back up. Had you not used too much liquidity or too much leverage and gave it a chance, you would have been able to build that into your position. And you would have said, I can tolerate price going all the way down to the vector. I can even tolerate price working its way all the way down towards this point right here. And I'll still be good, which then effectively acts as an area of support, which they could bounce from and then come all the way back up. And if you're not comfortable with it, you can kill the trade and take a little bit of a scratch on your capital. That's how you should really approach trading. It has to be systematical, logical, objective, so that you make decisions purely on what it's doing rather than what you want it to do and what your balance is saying. That's how we do it, okay? Now, quickly going back into Ethereum in this area here, we've seen that there's been a lot of limit buy orders that have been triggered. Look at this. All these guys have been loading up. Oh, wow. Look at this. 2,160. And this was a position that had been played for 5 days, sat in the bids. 14 million was traded, and the initial amount was 646,000. 2,177%. That is absolutely crazy. Now, going into Ethereum, we can see how likely is this area going to hold. Well, we're seeing guys already trying to bid up at this point. So 2.3 million was traded at this zone. And, of course, the initial amount was 2.28. So it's only up by 3% as such. So we're not really too fussed about that. But we're going into what appears to be some more selling that could be happening, which is going to fuel the move to the upside to effectively see Ethereum try and take out these zones right here. Now, we've effectively got 700,000 to be traded at this top side zone. But top side up here, we've got 500,000. Looking for any points of interest, we've got 1.2 million traded at 2,400. So we really need to be paying attention to this whole range with Ethereum. Okay, it could be en route to start sweeping things, but we've got to be mindful of the fact that we are heading into some interesting psychological areas and the 200 EMA, which could be acting as a point of resistance in the short term. So just take that into consideration, okay? Going into the crypto, the Cointelegraph Markets Pro flavor, what we've got right now is IOTX is now coming into play again with a 28% change, well, 28% change in its price with 251% on trading volume. Let's just quickly have a look at that bad boy right now. IOTX USDT. We've got that tethers coming up right now. Here we go. So look at that, making a nice little flavorsome move to the upside, continuing this move higher. It's gone way beyond this average weekly range. It's gone way beyond the range daily high. Now it's heading towards the average weekly range high. Sorry, I meant the range weekly high. And that's the weekly open as well. So we're going into pretty much price discovery as such. Not price discovery, but in the visible range. Okay, so it's very interesting that it's actually cleared this range. And I do believe that this was the analogy token that we used. So effectively find the flavor. Okay. Okay, yeah, I've seen, you know what? I've seen this comment around quite a bit. Okay. Truthfully, we've trapped current buyers. We are dumping to 38K. Okay, then. So let's put that logic into perspective right now. Look, IOTX is running for it right now, guys. It's going for it. Let's just put that logic into perspective about this is buyers effectively getting trapped. Let's put the logic together. Buyers getting trapped. I would agree and say, yeah, retail players who are coming in right now and buying Bitcoin's move up. I mean, we just had $42,000 Sorry, not 42,000. We go in closer, we can see that we've had some guys buying in at 31 million, which shows 42,771 as the price point. So they're buying at the top side of that zone. Some clever dick right here went short at $21 million worth of shorts were opened at the 42,077, which happened to be the same spot that people purchased at. And they've realized a nice little bit of a flavorsome return with those liquidations coming into play at 42,500. So the same dudes that went long inside of, where is it? Oh, it's not there, but some guys got liquidated earlier on from a previous move up. But anyway, doesn't matter. But we've seen some shorts coming into play here, 22 million at 42,000. And then we've got more buys coming in here at 23 million at 42,691. And then we've also got 19 million coming into play at 42,720. So, yeah, we can see visibly that the people are being trapped in buys. Now, the only way that people are being trapped in buys is if people do decide to stop selling Bitcoin on the way up. Now, here we have our dearly beloved Bookmap. So check this bad boy out. So we've got effectively lots of liquidity coming in. All right. Now we've got Bitcoin nowhere near the VWAP. We didn't even see the test of the VWAP today, but we've had the limit sales coming into action. And now we've got these three pools right here. One where we've got the limit buys coming into action right now. It says plus 22%. So I'll just bring that down for you. You can see plus 23% at the top right there, which shows us the imbalance that's happening on the order flow, which tells me now that limit buys are currently coming into play, which means people are buying Bitcoin as it's going lower. Okay. Now we've got some interest at 43,200 with 205 Bitcoin orders. And right now we've had some commitment coming in around the 296 Bitcoin orders at 41,700 and 41,800. They just cancelled it. Okay. So 41,800, we got 96 Bitcoin orders. So this is what I mean about potential spoofs inside of this area, but do not dismiss the fact that this zone does have interest to come into play by the sellers and by the bidders. Okay. So the area that we're talking about is 41,700 and 42,100. Why is this area important? Because it tells us that this is where the sellers started to come into play and this is where the bidders started to come into play. In other words, the buyers stepping in and buying up Bitcoin in this range. So logic would assume that if there's no sellers coming in at this point, we assume that the buyers are going to step in at this point if Bitcoin does decide to correct and drop all the way down towards the 42,000 zone. If they've been building their shorts above the 42,000 zone, then they've started to build them above the 42,500. We should see in principle a short-term move to the downside, which would in logic then tell us that traders are trapped at this point in the chart. How do we verify the trap of traders? Well, then let's just go over to look at EXO Charts. Now, there's that imbalance fully recovered to test the logic of the bidders coming into play. No interest. They've dropped it down again. Watch the first 5-10 minutes of the stream to understand what I'm talking about. So what have we got going off here? Are the buyers actually trapped in the move to the upside? Well, we can verify that with the delta coming in at 28%, 25%, 31% on the move to the upside. No one is effectively buying at this point. Remember, when you see green delta at the highest point of a move, it suggests that people are being sold to. When you see negative delta at the lowest point in the chart, or the visible range that shows high readings of delta like minus 45%, it means that people are selling, but they're only selling because there's someone buying. So when you understand that relationship, you're then going to get caught up and be like, hold on a second, bro. Why am I buying as Bitcoin's rising? Now, don't take into consideration the daily time frame, the 4-hour time frame, or even the 1-hour time frame. We're talking about tick charts right here, where Bitcoin changes on average around 4,200 times in terms of the pricing, how often it changes. That's what a tick chart is. It represents the change in price, and that's 4,200 times. The average candlestick time it takes for it to complete is roughly around a minute, 2 minutes, 3 minutes, 5 minutes, depending on what time of day we are in. So you get the flavor, right? This is about, I'm a scalper. I trade the depth of market, ladies and gentlemen. This is the stuff that I work on. Okay, I take the hybrid system, I take EXO charts, and I incorporate it all together to understand the commitment of traders inside of this range right here, where I'm getting the order flow, reading the behavior. Okay, let me bring you an example. Imagine you have yourself. Okay, so this is what a candlestick does right now to the retail trader. All right. Just as an analogy to help you understand why it's important that you understand what's going on inside of the candlestick. The good thing with you guys is you've got the hybrid system. So we just bring that up for a second. The hybrid system in principle gives you the heads up that the green and the blue and the red and the violet vector candles are a representation of the analogy that I'm going to explain right now. So imagine you go to a Ferrari showroom and you say to the guy, I want to buy a Ferrari. So he then comes up to you and he says, okay, come and look at this. He shows you two Ferraris, both of them exactly the same color, exactly the same price. And he shows you both of them. And he says, here you go. Pick one. And you're there like thinking, hold on a sec, bro. Like, why are you showing me exactly the same car? You know, why don't you show me another one? He goes, no. This is your option today, all right? All the other cars are irrelevant. You got the flavor of these two cars right here. Okay, cool. So you think, all right, this guy's a little bit of a whack job. So you know what I'm going to do? I'm just going to buy this car. So you pick up the car. You pay 100 grand and you're like, happy days, I got me a good old Ferrari. You then get into the Ferrari. You take the fob from the gentleman. He gives it to you. You then leave it in the car. You get the trigger. You press it and the ignition and the car doesn't start. Why doesn't the car start? So then you go to the reverse of the vehicle, you pop up the boot, and then you're having a look, and there's no engine. Hold on a second, brother. I've just paid 100 grand for a Ferrari. It's nice, it's red, it looks amazing, the curvature, the aerodynamics of the car itself. It's an in-house, it's a crypto whip. Actually, no, a crypto whip is a Lambo. A Ferrari is a little bit more, you know, if you're fucking with ETFs. But anyway, that's another story. But it's a very nice car. There was a reason to buy it because it looks nice. There was a reason to buy it because price was moving up. There was a reason to buy it because the candlestick showed a big fat green pointer to the upside. There was a reason to buy it because they're talking about it. There's a reason to buy it, yet you got into your car, you got into your trade, and it went in the opposite direction. That's what order flow is, ladies and gentlemen. Order flow effectively tells you how good is the candlestick. Where's the volume to back it? You won't have the problem of looking at a candlestick when you're looking at order flow because you can back the idea of who's buying inside of this zone. So now let's just go back to EXO Charts. Remember what we said. Here is what the vector candle tells you. Here is what order flow tells you. You see these zeros right here? That is the boot of the Ferrari that you just paid 100 racks for and you didn't even realize that it had no engine. That is it right there. 0, 0, 0, 0. We started the live when price was up here. We had the imbalance right there. They came back into it. That is your advert for the trader, for the person who buys the car with no fucking engine in. That's what you've got to be looking for when you are trading the order flow, when you're trading the hybrid, when you're trading trades all together. Don't be fooled by the big candlesticks that you see, because if you've recognized it straight away and it was easy for you to notice, there's a good chance that there is a possibility it's going to reverse in the shorter term. That right there, ladies and gentlemen, is candlestick 101. We're told the opposite. You see a big candlestick, it's fucking bullish. All right, cool. So why is it retail always asks the question? Why do I always end up losing when I take a trade and I see a big candlestick and it always reverses against me? Then I take the change in direction, go short, and it ends up going back up again. Well, because, like I said, if it's really obvious and easy for you to notice, there's a good chance that it's a trap. Now, with the exception of Bitcoin and other assets that are coming away from specific zones, when you're trading on the 1 hour time frame, you look at this and you say to yourself, well, Bitcoin's trading sideways. There's no problem there. Okay. And it looks like it's creating a bigger structure right here to effectively come out. What I have just said to you is applicable to the trader on the smaller time frames, anything from 1 minute all the way up through to the hour time frame, tick charts, you name it. All right. Because we see these candlesticks and they're all part of a big move to the upside or to the downside, all right? But when you've got someone that's playing a longer term move, it's irrelevant for him. Why? Because look, let's just go to the daily time frame. Bitcoin makes a big move to the upside on the daily time frame. Notice that you've got these big pushes up. The green vector candle tells you that. You've had a move from this point, it shifts out. You've had a green candlestick move here, it moves up, finds a bit of resistance, and then rolls over again. Cool, they loaded up a little bit more, but you had a little bit of success on the move moving up. Then you see this green candlestick right here, which appears at the lowest point of the range, and you look left and there's another place for them to go long into, because that's where traders are buying. So that's where they logically move price up towards. The thing that you want to be mindful of is where you're buying when everyone is shit scared to commit. And believe it or not, people in cryptocurrency have got the balls of steel. Why? Because they got diamond hands. They don't give a shit. They're holding on to it to dear life until the asset gets delisted. Okay? So the guys in crypto... Altcoins. What time are we on? No, I think it's time. ACE is coming up into action. ASTR is coming into play right now. Let's just quickly go and check that bad boy out. I'm going to keep this short and sweet. Here we go. Look at that, man. We spoke about it today. Full recovery, man. Look at that. It's going and it's going to be rolling over. Especially after a big fat boy move right there, ladies and gentlemen. So just take that into consideration. Okay? With that being said, guys, look, I want to get this party started off, okay? Remember, we're running a 20% discount on any of the memberships on the Traders Reality website. And of course, we got 20% off on the course, which is the scalping course right here, where these concepts that I've just discussed are pretty much all in there, and they show you how to scalp using the hybrid system. And then if you are completely new, just get on with the breaking down the hybrid system. It's the free course. Prioritize the free course before you even decide to start buying anything. Make sure you've got the confidence in the hybrid at first, because if you don't understand what this green candlestick means and what this red candlestick means, how are you going to be familiar with the Ferrari analogy, and you're going to be the guy that ends up buying the Ferrari with no engine? Ladies and gentlemen, mad love and respect. I'll be checking in with you all for tomorrow's flavor. Take care of yourselves, gang. Peace.